Hello students, welcome to the accounts class. In this video you will learn why we make adjustments for accruals and prepayments in the expense and revenue accounts at the end of an accounting period. By the end of this class, you will be able to adjust expense and revenue accounts for amounts owing and amounts paid in advance. Finally, you'll be able to show how accruals and prepayments are presented in the trading and profit and loss account and the balance sheet after the adjustments are made. Now, here is an extract from a profit and loss account. Notice the expenses that have had adjustments made to them, like carriage outwards, rent, and general expenses. And here's an extract taken from a balance sheet. Notice that it shows prepaid expenses, accrued revenue, and accrued expenses. Now, why are these adjustments necessary? At the end of an accounting period, when the final accounts are being prepared, you will want to know how much you should charge for expenses in the profit and loss account and how much revenue should be credited. For instance, the balances on some of the expense and revenue accounts in the ledger may not truly reflect what was used or earned, respectively. Some accounts may be in arrears. On the other hand, money may have been paid or received for a future period for a service that has not yet been incurred or used. That brings us to the accruals or matching concept. According to the accruals or matching concept, revenue earned in an accounting period must be matched with the expenditure incurred in earning it, regardless of the period in which the cash was received or paid. Usually, there is a difference between the date when the expense was incurred and the date when the money was paid for it. An expense is recognized at the point when it is incurred and not when the money is paid. During the current period, any money received or paid for a past period or for a future period should not be included in the current period's profit and loss account. For example, if the accounting year started in January 2019 and the tenant owed rent for December 2018, which he paid in January 2019, that rent for December 2018 cannot be included in the profit and loss account for the year ended December 2019. In the same way, if the tenant paid rent for January 2020 during 2019, you would have to deduct it from the amount you received during the year. For accrued expenses, the amount debited in the profit and loss account is arrived at by adding the amount owing to the amount already paid. Remember that the amount that is charged to the profit and loss account is the amount actually incurred. An accrued expense is a current liability in the balance sheet. Notice that the accrued expense is entered after accounts payable. For prepaid expenses, the amount debited in the profit and loss account is arrived at by subtracting the amount prepaid from the amount already paid. A prepaid expense is a current asset in the balance sheet. Notice that prepaid expenses is entered after accounts receivable. Accrued revenue is income that is already earned. The service had been delivered. That revenue must be included in the profit and loss account. The revenue owing must be added to the amount that was already received. Remember that only revenue for the current accounting period should be included in the profit and loss account for that period. Any amount that is owing for the previous accounting period must be subtracted. The revenue owed to the business will be a current asset entered below trade receivables on the balance sheet. Prepaid revenues. If revenue is received in advance, the amount prepaid must be subtracted to arrive at the current value to be shown as a credit entry in the profit and loss account. At the beginning of the accounting period, there may be a prepaid revenue. Any revenue received during the previous period but attributable to the current period must be added. Prepaid revenue is entered as a current liability on the balance sheet. Now, let us look at some examples. It is important to remember that during the current accounting period, any money received or paid for a past period or for a future period should not be included in the current period's profit and loss account. Let us look at an example. Mr. Black rented a shop for $500 per month. It is now December 31, 2019, and he has not paid any rent for the last 2 months. For the year ended December 31, 2019, how much should be transferred to his profit and loss account for rent? Now, the amount that will be transferred for rent to the profit and loss account is the amount that was actually incurred, the amount that was actually used. So, if he only paid for 10 months and owed for 2 months, we must add the amount that was owed to the amount that he actually paid, because it is the total rent for all 12 months that must be transferred to the profit and loss account. Okay, so we are looking at the amount that he paid. He paid $5,000. The amount that he owed $1,000. He owed for 2 months. So the total rent that should be transferred to the profit and loss account is the amount paid plus the amount owing. And that is $6,000. Now let us see how the rent account will appear. During the year, he paid $5,000, so you would debit his rent account with that $5,000. The amount that should be transferred to the profit and loss account is $6,000, so you credit the rent account with that $6,000. And at the end of the period, you're going to balance the account to see what is left on it. The amount that is left on the account is the amount that is owed. So you're going to have a balance carried down, and we're not calling it a balance, we're calling it accrued. accrued carried down on the 31st of December of $1,000. Okay, so your rent account will have a credit balance on it of $1,000. It is an amount that is owed. Let us look at another example. Supposing Mr. Black had started the year owing a month's rent of $500. We're using the same information as before. The monthly rent is $500 per month. And he started the year owing 1 month's rent of $500. During the year, he paid $5,000 for rent. Now, what was his rent account look like? So, the first entry in your rent account would be the opening balance, your balance brought down, accrued, the accrued brought down of $500 on the credit side. During the year, he paid $5,000 for rent. So that's a debit entry in your rent account. You know that the amount to be charged for rent is for 12 months. That is 12 times $500, which is $6,000. That's a credit entry in your rent account to make that transfer. Okay? Because your profit and loss account will be debited. Rent is an expense, so you're going to debit the profit and loss account and credit the rent account. Okay, so the only other thing left for you to do is to balance the account, and you're going to end up with an accrued carried down on the debit side. That is going to make it a credit balance because it is going to be brought down on the credit side in the next period. Okay, so remember the amount paid in the current period plus the amount owing minus the amount paid for a previous period is the amount that will be transferred to your profit and loss account. So, suppose you did not know how much should be transferred to the profit and loss account. You do know that he started out with an accrued amount on the account. There was an accrued amount brought down for $500. You also know that he paid $5,000 during the year. And you also know that he owed $1,500 at the end of the year. So if you did not know how much to transfer to the profit and loss account, and you have all the other pieces of information, all you would have to do is just balance the account, and the missing item is what will be needed to balance the account. Okay, so you would end up with the amount to be transferred to the profit and loss account being $6,000. Let us look at another example, and this time we are looking at prepaid expenses. In this example, the tenant is required to pay 3 months' rent in advance. On January 1, 2019, Mr. Amos rented a building for $500 per month. During the year, he paid a total of $7,500, which included the 3 months' rent that he paid in advance. How much rent should be charged or transferred to Mr. Amos's profit and loss account for the year ended December 31, 2019? Okay, so we look at the amount that he paid. He paid for 15 months at a rate of $500 per month, so that is $7,500. We look at the amount that was paid in advance. And we look at the amount that was actually incurred. Okay. Remember now, the amount paid in the current period minus the amount paid in advance is the amount that will be transferred to your profit and loss account. So look at the entries that would have been made in his rent account. During the year, he paid $7,500. So that would be debited to his rent account, the payment that he made. At the end of the year, we know that he overpaid. He made a prepayment of $1,500. So that is going to be carried down as a current asset to the next period. He's making a prepayment, so that is going to be a current asset on the account. So it has to be carried down on the credit side in order for it to be brought down on the debit side. So in balancing the account, you'll see that the amount to be transferred to the profit and loss account is $6,000. Another example. Now, using the same information, if Mr. Amos had rented the same premises from 2019 and had been paying the same amount of rent in advance, this is what his rent account would look like. He would have started the year with an amount of $1,500 prepaid, paid from the previous period. During the year, he paid an additional $6,000, so that is credited to his rent account. At the end of the year, he would have prepaid for 3 months. So that is a credit entry in his rent account. And by balancing the rent account, you'll see the amount that will be transferred to the profit and loss account. It will take $6,000 on the credit side to balance this rent account. Okay, so that is the amount that will be transferred to the profit and loss account. The amount that was prepaid is a current asset for Mr. Amos. So it will be brought down on the debit side of the rent account in the next period. Now let's reason it out. The amount paid during the current period plus the amount paid in the previous period for the current period minus the amount paid for the future period is the amount that will be transferred to the profit and loss account. Remember, only amounts relating to the current period should be transferred to the profit and loss account for the current period. If amounts are paid for a future period, that must be deducted. If an amount was paid for a past period, that must also be deducted. This time we look at an example having to do with accrued revenues. A business earned commission of $8,000 during 2019, but only received $6,000. If the business were owed commission of $400 at the start of 2019, what would the commission revenue account look like? Okay, so we're told that the business was owed money. So if the business was owed money, it means that's a current asset. So that accrued revenue, the accrued commission revenue, would be brought down on the debit side of the commission revenue account. During the year, the business received $6,000 for commission. So that's a credit entry in the commission revenue account. We know that the amount of commission earned was $8,000. So that is the amount that would be transferred to the profit and loss account, the total amount earned, not just the amount that was received. Okay, the business received $6,000, but it earned $8,000. So at the end of the year, when you balance the account, you're going to have an amount of $2,400 carried down on the credit side. That makes it a current asset for the business because that balance will be brought down on the debit side. It is an accrued revenue. It is owed to the business, so that makes it a current asset. Okay, so for revenues, the amount received plus the amount owing for the current period is what is going to be transferred to the profit and loss account after you take out the amount that was owed for the previous period. Remember, it's only the amounts relating to the current period that will be transferred to the profit and loss account for the current period. And one last example. Here we're looking at prepaid revenues. D-Dove sublet a part of his building for $500 per month. At the end of 2018, he had received $500 for rent, paid in advance by his tenant. During 2019, his tenant paid him a total of $6,500 for rent. Now, this is what the rent revenue account would look like. Remember, you're starting the year with an amount that was prepaid. The tenant had prepaid his rent account. So, D-Dove owed the tenant that $500. So it is brought down on the credit side of the rent revenue account. Now, during the year, the tenant paid an additional $6,500. So that's a credit entry in the rent revenue account. Now, you know that the total amount for rent for the whole year is $6,000. Remember, it's $500 a month for the rent. So for 12 months, the rent is $6,000. That is what is going to be transferred to the profit and loss account. Now, when you balance the account, you're going to have an amount carried down of $1,000. That is a prepaid rent revenue. Okay, so it's prepaid carried down, and when it is brought down, it will be brought down on the credit side in the next period. So that makes it a current liability. D-Dove owes the tenant this amount of money. The tenant had prepaid it. Okay, so the revenue received in the current period plus the revenue received in the previous period for the current period is what is going to be transferred to the profit and loss account after you deduct any amount received for a future period.